Well, what can I really say about Tesla? They've really had quite the recovery so far in 2023 in terms of their share price. They are the poster child of the last few years of stock market growth. Pretty much anybody who made a name for themselves on YouTube in terms of investing did so on the back of companies like Tesla. Okay? Now, I'm going to give Tesla a lot of credit here, okay? When we pull up their financials, what do we see? Year after year. Sales growth, 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 okay? And honestly, even though, yes, eventually this will have to slow down at some point, it's still impressive nonetheless, and they deserve some kind of credit for this track record, okay? I'm sure there have been times along the way where everyone said, oh, this is it. The growth train's finally coming to a halt when it comes to Tesla. And then they follow it up with some kind of a killer year and record-breaking sales. It's just what they do. Elon Musk is an interesting character, and oftentimes I think shareholders of Tesla would benefit more from him being quiet. But then again, if he was quiet, would this many people be as interested in Tesla as they are? That's a good, interesting question for you. Now, regardless of how you feel about Elon, they've also managed to grow not only the top line, but the bottom line as well. Okay, diluted EPS has risen from the negatives only a few years ago to $3.62, which means that this share dilution on the whole hasn't been too much of a burden on shareholders. Granted, yes, it does mean that your share of the business is getting smaller and smaller the more they do this, but at the same time, their shares have been trading at high multiples, okay? And selling those shares and using that money to fund different growth could have been done in place of taking on a lot of debt. And with interest rates going up, I think everybody will be happy that there will be less debt, okay? You don't want the price of the brick to go up when it comes to debt. It can be very burdensome on a lot of different businesses, especially car businesses where you don't always have the best margins, okay? Now, they do have high margins for a car company, but my understanding is a good portion of that is from different electric vehicle, like tax credits and subsidies and things like that. So will that always be the case in the future as more and more car companies just go electric and electric becomes more of the normal thing? Can't say that for sure, so that's something to keep your eye on. But we can't really necessarily predict that one way or the other. So any assumptions we make about this when we come up with a price to pay, we should, maybe factor that in as a little bit of an X factor, but don't really assume too hard one way or the other with regards to that. Now, when we look at analyst expectations as a starting point, they are estimating that EPS for 2023 will be $3.64. So that'll be our starting point. And they estimate EPS growth very high for the next year or two, with it kind of slowing down to the low double digits, so like 12-ish% in the years immediately after that. And I think it would be safe to say, like, if you extended that out further, it would probably slow down a bit more. And the 10-year average would be something like that 12 number because of the much, much higher growth in the more near future years. So I've already modeled a starting point of $3.64, okay, because that'll be this year's EPS based on the analyst estimates. And as you know, the more near-term those estimates are, the more likely they are to be correct. Give it in the credit for that tangible book value. Now, I want to keep be very transparent here that this model wouldn't necessarily take into account if they have like an especially large amount of dilution or anything happens with their margins or whatnot. This is just kind of like extrapolating out based on what we know of what they've done in the recent past with what the analysts think they will do in the near future, and making general assumptions about the further distant future, because this is really all about the stream of cash flow we think this thing will produce over the next 2 decades. And with that being said, it's important to make conservative assumptions, because on a longer timeline, it's much harder for a company to just keep winning and winning and winning and winning without having any backslides, any stutter steps, anything like that along the way. Okay? And as companies generally get bigger and bigger and bigger, it gets harder and harder for them to maintain extremely high levels of growth. So you need to tone down your assumptions and make sure that they're on the more reasonable side. Because if the company does exceed your expectations, but you bought the stock based on conservative expectations, you'll get a better return than you expected. Okay? So with that being said, I assumed 12% over the next 10, followed by a slowdown to 6% over the subsequent 10 in the terminal stage. And with that, leaving the 10% discount rate, I come up with a fair value of just over $90. Now, why do I not use a higher discount rate? Well, for one, I think Tesla, based on what they have done already, probably has a higher chance than average of doing a little bit better than the numbers I've put in. But also, I think if it gets into that $90 range, if I acquire my shares through the sale of cash secured puts, I can probably extract a little bit extra return beyond the 10% using that method with the options premium. So I would probably be satisfied somewhere in this range. Although at the time when the stock falls to this price, it could be that some facts on the ground have changed, some analyst estimates have changed, and that it might be necessary for me to adjust some of these projections and assumptions, and then maybe at that point I might come up with a slightly different number than this, right? But for now, with the numbers as they sit, this stock, needs to fall like 65-70% for me to really engage with it, okay? And some of you might be saying, dude, it's not going to fall that much. Tesla's invincible. There's no way that's going to happen. Well, need I remind you that earlier this year they were, 52-week low is $101. They were within striking distance of this at one point in time. So what happened once can certainly happen again. All it takes is 1 or 2 bad quarters, and we've seen it happen before. We've seen it happen with Meta. Tesla was close to this area price-wise. Stocks can and will fall. And, if Tesla doesn't reach my target price and I never get shares of Tesla, that's fine, because there are other stocks out there that will reach my price, okay? Remember, there's thousands of publicly traded companies out there in existence for you to look at. You don't have to get stuck on any single one company. None of these companies are must-haves for your portfolio. That is a fallacy, okay? Another fallacy is that it doesn't matter what you pay as long as you think it's a quality business, right? I'm conceding that this is a quality business. They make a very innovative, amazing, awesome product. I've test-driven a Model S before. Very fun. Loved it. Great experience. Great story that I like to tell sometimes. But that doesn't mean I'll pay literally any price to own a piece of this business. You can pay too much for a great business. Now, if I believe in paying a reasonable price for a good business that'll be around for a really long time. That's really just the essence of what we're trying to do here. Now, if you own any Tesla stock, I invite you to comment below. Tell me what your basis is. If it's on your watch list, tell me what your watch list price is. Hop in Discord. Link will be in the description. Make sure you like and subscribe. It really helps me with that algorithm and whatnot. Become a member of the channel for exclusive members only stuff that I'm planning to do in the near future. Really helps out the channel in that way. And remember, they start as low as $1 a month. I don't think many other people offer anything that reasonable. Take it easy, everyone, and have a wonderful afternoon. Peace out.